The US dollar stands as a cornerstone of the global economy. It is the world's primary reserve currency, held by central banks worldwide. The dollar's dominance influences international trade, investment, and financial markets. The policies of the Federal Reserve, particularly under Chairman Jerome Powell, have a ripple effect globally. The dollar's significance stems from the size and strength of the U.S. economy. It also benefits from stable political institutions and a liquid financial market. These factors contribute to the dollar's role as a safe haven asset during global uncertainty. Investors flock to the dollar when geopolitical risks or economic turmoil arise. A strong dollar makes imported goods cheaper for consumers but can make American exports more expensive. This impacts the competitiveness of U.S. companies in the global marketplace. The Federal Reserve must carefully consider these factors when implementing monetary policy. The U.S. dollar's preeminence in the global financial system is undeniable. Its value and stability are influenced by a multitude of factors, including Federal Reserve policies. Understanding the dynamics of the dollar is crucial for anyone interested in the global economy. Jerome Powell assumed the chairmanship of the Federal Reserve in February 2018. He inherited an economy recovering from the 2008 financial crisis. Interest rates were at historic lows, and the Fed's balance sheet had ballooned due to quantitative easing. Early in his term, Powell continued gradual interest rate normalization to prevent the economy from overheating. He also oversaw the unwinding of the Fed's balance sheet. However, the COVID-19 pandemic in 2020 presented unprecedented challenges. The pandemic plunged the global economy into a deep recession, forcing the Federal Reserve to take swift action. Powell led the central bank in slashing interest rates back to near zero and launched new rounds of quantitative easing. His leadership has been widely praised for its decisiveness and flexibility in extraordinary circumstances. The long-term consequences of these unprecedented monetary policy actions remain to be seen. The Federal Reserve employs various monetary policy tools to influence the U.S. economy. Among these, interest rates and quantitative easing, QE, are the most prominent. Interest rates are a fundamental lever of monetary policy. The Federal Reserve sets the federal funds rate, influencing borrowing costs for businesses and consumers. Lower interest rates generally stimulate economic activity by making it cheaper to borrow money. Conversely, higher interest rates can curb inflation but may also slow down economic growth. QE involves a central bank injecting liquidity into money markets by purchasing assets like government bonds. This increases the money supply and lowers long-term interest rates, encouraging borrowing and investment. QE was deployed aggressively by the Federal Reserve during the 2008 financial crisis and the COVID-19 pandemic. Higher interest rates tend to strengthen the dollar as investors seek higher returns on dollar-denominated assets. Conversely, QE can weaken the dollar as it increases the supply of dollars in the market. The US dollar's value fluctuates against other major currencies based on supply and demand in foreign exchange markets. These fluctuations impact international trade, investment flows, and the relative prices of goods and services across borders. Against the euro, the dollar has experienced periods of both strength and weakness in recent years. Factors influencing the euro-dollar exchange rate include interest rate differentials, economic growth prospects, and political developments. The dollar's value against the Chinese yuan is influenced by trade relations, China's exchange rate policies, and global commodity prices. The Japanese yen often serves as a safe haven currency during times of global uncertainty. This can lead to an inverse relationship with the dollar. The British pound is influenced by economic conditions in the United Kingdom, interest rate differentials, and Brexit uncertainties. Monitoring these exchange rates is crucial for businesses engaged in international trade and investors with global portfolios. Understanding the factors that drive these currency movements can help in making informed decisions regarding foreign exchange risk management and investment strategies. Predicting the future of any currency is inherently challenging. The US dollar, despite its dominance, is not immune to global financial forces. Experts monitor Federal Reserve policies, competition from other currencies, and digital assets. Interest rate hikes could strengthen the dollar but slow economic growth. The euro and yuan challenge the dollar's dominance. Digital currencies add complexity to the dollar's future. Despite challenges, the US dollar is likely to maintain its status as the world's leading currency. The dollar benefits from a unique combination of factors that underpin its enduring strength. The US economy remains the largest and most dynamic in the world. Its legal and regulatory frameworks provide a solid foundation for the dollar's stability. These factors foster confidence among investors and central banks alike. The dollar benefits from a network effect. Its widespread use in international trade creates a self-reinforcing cycle. Businesses transact in dollars, investors hold dollar-denominated assets, and central banks maintain substantial dollar reserves. This network effect creates inertia difficult for other currencies to overcome. The dollar's underlying strengths suggest it will remain a pillar of the international monetary system. Prudent economic policies can ensure its continued role as the bedrock of global finance. The future of the US dollar is inextricably linked to the evolution of the global monetary system. As we navigate a landscape characterized by technological advancements, geopolitical shifts, and evolving economic power dynamics, the role of currencies, including the dollar, is likely to be reshaped. What are your thoughts on the factors that will shape the future of the US dollar? Do you foresee a multipolar currency system emerging, with the dollar sharing its dominance with other currencies like the euro or the yuan? How do you think the rise of digital currencies and CBDCs will impact the global monetary order? Share your insights and perspectives on these critical questions. The future of money is a shared conversation, and your voice is essential in shaping a global financial system that is stable, inclusive, and responsive to the challenges of the 21st century. Let's engage in a meaningful dialogue and explore the possibilities that lie ahead.